Welcome everyone to this explainer. Okay, so when you think of the United Arab Emirates, what's the very first thing that comes to mind? For a lot of people, it's a playground of pure luxury, right? You picture the mega yachts, the soaring skyscrapers, and just these incredibly extravagant lifestyles. But today's source material actually completely flips that script. We're analyzing the region not as some flashy tourist destination, but as a fiercely data-driven global investment market. We're talking about verifiable, mathematical ROI that is frankly outpacing a huge chunk of the traditional global market. So, think of this as the investor's guide to the UAE, specifically tailored for those of you looking to deploy capital with absolute precision. Let's get into it.
You know, the guiding philosophy of this report really sets the stage perfectly. Aggressively ignore subjective market noise. And you know exactly what that means, right? The flashy headlines, the emotional buying, those wild speculative trends that honestly just end up trapping unsuspecting buyers. Instead, the source material roots its investment thesis strictly in hard data. The entire goal here is to highlight the optimal deployment zones in the UAE that maximize your portfolio resilience and capital efficiency.
So here is our roadmap for this executive briefing. First, we have the investment thesis. Second, algorithmic market methodology. Third, top-yielding regions. Fourth, foreign direct investment frameworks. And finally, deploying your capital. All right, Section 1. The investment thesis, hedging against volatility.
And Section 2, algorithmic market methodology. So before we even look at specific regions, we really have to ask, why even look at the UAE right now? Well, this report is tailored for investors who prioritize passive cash flow and capital efficiency. In a macroeconomic climate where volatility literally feels like the only constant, the data aims to isolate specialized property markets within the UAE that are designed to capture market cycle expansions. It acts as a genuine hedge against global turbulence. But obviously, the credibility of your data dictates the safety of your investment. This illustrates exactly how the algorithm analyzes the market. It isn't just some manual, once-a-year survey. Step 1 is a programmatic analysis of real-time indicators across a massive global database. Step 2 aggressively filters out that subjective market noise we just talked about. And Step 3 isolates verifiable ROI performance. Honestly, what's incredible here is that this architectural database operates dynamically. The rankings prioritize the ROI metric based on real-time market realities, not some outdated trends from 6 months ago.
Moving on to Section 3, top-yielding regions, the data matrix.
Okay, so with that rigorous methodology firmly established, it's time to reveal the top-performing asset zones. Just take a second and look at that number, 8.5%. In the world of real estate rental yields, achieving an 8.5% return is just staggering. This is the estimated yield for the #1 ranked region, International City in the UAE. But you know what makes this figure even more compelling? It's not just the yield itself, it's the incredibly low barrier to entry. This highly localized, cash-flowing market has a minimum entry point of just $80,000. For international investors who are analyzing global markets, finding that level of capital efficiency combined with that level of yield is exceptionally rare.
Now, looking at how the top 3 stack up against each other, International City clearly leads the pack at that 8.5%. But notice what is right behind it. Jumeirah Village Circle, which is commonly known as JVC, is generating an estimated yield of 7.8%. And right on its heels is Arjan at 7.6%. These are massive, massive returns across the board. And just like International City, these are highly accessible markets. JVC has a minimum entry of $180,000, and Arjan comes in at just $160,000. So for an investor prioritizing passive cash flow, this layout is essentially a strategic roadmap handed right to you.
Let's move over to this extracted data matrix and see how this builds a much broader investment picture. We've talked a lot about yield, but the algorithm also models estimated capital growth. This illustrates an absolutely crucial choice for investors. Do you want the immediate gratification of maximized passive cash flow, or are you willing to trade a fraction of a percent in yield for explosive long-term capital appreciation? Look at rank number 4, Dubai South. It still offers a fantastic 7.5% yield, but the estimated growth is a highly accelerated 9.5% with a minimum entry of $150,000. And then look down at rank number 5, Al Marjan Island, a super solid 7.5% yield, but an absolutely massive 12% estimated capital growth from a $200,000 entry point. This matrix perfectly demonstrates how deployment can be tailored strictly to your specific portfolio goals.
Section 4, foreign direct investment frameworks.
Now, seeing great numbers on a screen is one thing, right? But if you are an international institutional buyer or maybe a high net worth individual sitting thousands of miles away, you have a very pressing question on your mind. Is this data actually suitable for international and foreign buyers?
Essentially, is my money legally safe if I deploy it into the UAE? It is a completely fair question, and frankly, the single most important one any serious investor absolutely must ask before moving capital overseas.
Well, according to the dossier, the answer is a definitive yes. You see, the algorithm doesn't just scan for high yields in a vacuum. It specifically targets markets operating within established foreign direct investment, or FDI, frameworks. In simpler terms, this targets areas legally designed to accept, regulate, and protect outside money. The data matrix exclusively highlights zones that ensure secure freehold property rights. That means you, as a foreign buyer, can own the physical property and the land it sits on outright. And where freehold isn't applicable, it ensures the zones are backed by exceptionally strong leasehold protections, which secures unshakable long-term usage rights. The takeaway here? These specific jurisdictions are legally tailored for international capital deployment. Investors aren't navigating some murky gray area. They are operating within a globally recognized legal structure designed from the ground up to protect foreign capital.
And finally, Section 5. Deploying your capital.
So we've reviewed the core thesis, we've verified the algorithmic methodology, isolated those top-performing asset zones, and confirmed the legal safety frameworks. The source material leaves us with this final, incredibly vital thought: deploy your capital with precision, not speculation. The data clearly outlines a rare global combination of accessible entry points, strong passive yields, and robust legal protection. The UAE market clearly rewards those who act on mathematical realities rather than getting swept up in emotional trends. So I'll leave you with this. If you were surprised by the math today, what else is hiding in the full data matrix just waiting to be leveraged? Thank you so much for joining me for this explainer. Stay focused, and I highly encourage you to dig even deeper into this data.